First, on the stagflation risk, is this something that investors should be taking seriously?
Good morning, Dan. I don't think we see any kind of recession in sight. So that takes away the stagflation risk. If you're looking at US GDP growth, that's around the 2% for 2024, and we have a forecast of about 1.7% into 25. If you're looking at consumer spend, if you are looking at earnings growth, the US looks at recession differently. It's just not the GDP numbers. And in no way is standard of living going down. So we don't see any stagflation risk as of now.
Of course, a big focus in the market right now is what's going to happen with the Fed as soon as next week. We're coming into this really important CPI print as well. What's at stake for the Fed, and what should investors be looking out for when that number drops in just a few hours' time?
So on the CPI, I think the consensus is right now on the core at 3.2% year on year and about a 0.2% month on month. Now, I think that's very much in line with expectations. Do not expect any market moves if consensus expectations are met. But anything higher is going to spook markets. Doesn't mean that the Fed cuts more. Anything lower is actually positive. It's in line with what the Fed wants. Our sweet spot for the Fed cut is a 25 basis cut in September, followed by another cut probably in December. And there is possibility of a third in November 25. So we are in the range of a 50 to 75 basis point cut this year.
It's absolutely fascinating because the Fed is in a really challenging picture and situation here as we track into the all-important US election in November. Anita, like me, you were up very early this morning to watch and analyze the debate. Just give me your quick take on what you think was most material for market investors coming out of this really fiery exchange that we've just seen between Harris and Trump.
I think what's really important at this time for the U.S. economy, for people living in the U.S., is their spend, their cost of living. So when we're talking about tariffs, if there is any increase in tariffs, that would raise roughly the cost to Americans for about $4,000 a year. So that adds to inflationary pressures. If you're talking about tax cuts, that's positive. So you've got two sides, going one talking about higher tariffs but possible tax cuts, and on the other side we've got possible tax credits in the form of child relief. And we've also got, to smaller businesses, we've got credits coming in. That's, very important for the U.S. economy. So I think we see a balance on both sides in terms of focusing on inflation.